Welcome to Money Matters with Greg, where we dive into the money conversations shaping your life. From investments to estate planning, insurance to taxes, we cover it all with a fresh perspective. Join Greg and his guests each week to get inspired and take control of your financial future. Let's get started. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.
All right, good morning, and welcome to another episode of Money Matters with Greg. Greg Farrell here, CEO and president of Farrell Wealth, a wealth management firm here locally to Valparaiso, Indiana, and also serving clients in 24 states. We have an office in Tampa now too, which is very exciting. We are here to talk about the markets. We're here to talk about money and how it can help you with your money, how your investments look now into the future as we move forward daily here in the markets. You can find the show on any Apple or anywhere you pod, at Apple, Spotify, you name it. And then also here at 103.1 FM WVLP, locally here to Valparaiso, Indiana. We're very excited to always be on at WVLP, and thank you for the opportunity to be able to broadcast here. For everybody at WVLP and the family that is here locally. It is a great, very tight-knit family, and we are very proud to be a part of it. As always, we like to remind everybody that the opinions voiced in this podcast are for general information only and not intended to provide specific advice or recommendations to any individual. To determine which strategies or investments may suit you, consult the appropriate qualified professional before deciding. That's obviously go talk to your tax attorneys, go talk to your accountants, go talk to your financial advisors. You name it, we don't want to sway one way or the other. And we'll definitely try to drive down the middle of the road in regards to our conversation today. We're going to talk about the degenerate economy and what that means, who that is, and how that looks. We're going to talk about the companies that are contributing to the degenerate economy, and also what's going on with the stock market today. Where that's our plan, and making sure that you're informed as far as the market goes, because it has been a wild ride and we are at all-time highs. So I feel like it's necessary to talk about these things as much as possible, so you get the right information. And you can take with it however you want. You can use it however you like and move forward. But the whole point of this show is Money Matters with Greg is to help you with your money, to add some value to you, to your family, to help you increase your wealth, grow your wealth, create your wealth, and then also protect your wealth, distribute your wealth in life, and distribute your wealth after death. So those are our four quadrants we always talk about here on the show. It's in our logo. We also include the fact that life is life is a game, and it's full of X's and O's, and that is also in our logo as well. The X's and O's are constantly moving, and they're always rotating and always changing. So happy to help you with those things in life as far as your financial literacy. And then also really just investments. We've been trying to stick with the investment theme here, or having to stick with the investment theme here as much as possible, just because the market has been fast and furious. Typically, we don't necessarily talk so many times about the market, but it's just been one of those things that we just feel like it's necessary. So that being said, again, the show's on WVLP 103.1 FM. Here locally, and then also anywhere you pod. So excited to have you here. And then also on our YouTube channel, please find us there. Any socials at Farrell Wealth. And then also, before I get going, really wanted to mention, please contact me, Greg at farrellwealth.com, with any questions you'd like to be able to jump in and certainly have me answer, or any questions you want to ask. I would love to be able to have you be a part of it. So please email us, Greg at farrellwealth.com. And the last thing of housekeeping before we get going is, guess what? It is NFL season. We're ready to start, baby. Got a fantasy football draft tonight. I'll find the last one, and then ultimately we have games. Our Bears are playing on Monday. I'm looking forward to it. Very, very excited to be able to go and attend. They're playing Minnesota on Monday Night Football. So looking forward to reporting back on that. Hopefully we have a good outcome. And we are very excited to have football back here in the Midwest. The weather has been tremendous. There's no humidity. There's no heat. It is the weather is perfect. The temperatures are incredible, and we are getting a fake fall for sure here in September, and anxiously awaiting higher temperatures to come back and get us. But for now, we're very, very happy as to how things look. So happy football season to everyone. It's been great to see college start, and then also with the pros starting this weekend. All right, so just giving everybody an update on the markets. We've hit an all-time high here across the board among every single indice. Stock futures today are up. This is as of Wednesday morning. We're broadcasting on Thursday at 1 o'clock, and then also Saturday at 1 o'clock as a replay. Thursday is the broadcast now, and stock futures are higher today. Google's up about 6% as a favorable court ruling saw the company avoid the severe antitrust penalties. And then international stocks were sort of mixed, and bonds have steadied. They've definitely um, been volatile with the recent conversation about tariffs and the Trump's trade war. We had sort of a recap. Just want to talk about the Dow at 45,295. The Hang Seng's at 25,345. Let's see, the Nikkei is at 41,938. FTSE's at 991.58. So it's, basically as far as the overall numbers and things, how, as far as changes goes, the Dow, the S&P, and the NASDAQ have all hit all-time highs and kind of reversed a little bit. The one thing I want to be able to mention is as August goes up, September has a history of going down. So we watch things as far as the months go. Typically, if August is greater than 1%, which it was up 1.8% in the S&P 500, history has shown us that September has been down at least a 0.5%, or if not more, as many as sometimes 3 to 4%. So just be aware that September has a tendency to be soft going into October. October also has a history of being soft. So we'll see how things go. We're cautiously optimistic for the end of the year, and how things will follow through by the end of the year is where we are today. But really wanted to be able to talk about one, just to kind of update you. You're seeing gold at 3,600. You've seen the US dollar at 98.31. And again, S&P futures are 65.57 as of this morning here today. So that's the update on the markets. I won't go into individual stocks or anything as far as that goes, but really had a lot of concerns with the Fed governors that have been talking, and Federal Reserve. So there's been definitely watching that as far as the economy goes. So, just as far as who's talking about what, whether we're being dovish or whether we're being hawkish, is still to be seen. But we are looking at a September 86% chance of a cut in rates. The October number's gone up a little over 25% as well as another cut. So looking towards the future here, and the dot plot that they have for the Federal Reserve governors, just trying to see where they line up, and there's definitely a fight between many of them arguing as to what this looks like here as far as rate cuts. But the odds are we're going to get a rate cut here in September, which will certainly affect a number of different things that will help consumers out. And hopefully we'll even see on mortgage rates as to what that happens. Wanted to talk today about this new degenerate economy that's out there. Americans have renewed their romance for the stock market for sure. And retail investors have really come in droves here recently. There's a lot of cash on the sidelines for years, and certainly in the last year, the year before. And this retail investor group has really helped to drive a historic rally in the S&P, the Nasdaq, like I said, the Magnificent Seven. Gold, Bitcoin, they've all set new highs, new all-time highs overall. And there are fundamental positives for sure, and it's undeniable that part of the year-to-date rally has been driven by old-fashioned speculation, which does exist and has not existed in a while. But this is really manifested in many ways as extreme valuations for companies that are AI, and that has something to be considered for sure. You've got new interest in IPOs and meme stocks, altcoins, digital asset treasury companies, you name it, single stock asset leveraged ETFs have become very popular, and prediction markets and prop tests and these things. And this is why I bring this up because not because we're advocating in any way one or the other or anything like that. We'd never do that, but just making sure that you are checking and not falling prey to this world of speculation, because with just disciplined investment principles allow you to make money over the long time. And a lot of this news has been this degenerate economy has been um, noise that has affecting investors. So some of the gains, though, in this risky group have really delivered short periods, have been delivered in short periods of time. So you've got the Mag 7, up 46% in 4 months. Plantier Technologies is up like 397. Circle Internet Group is up 335%. You've got Cantor Equity Partners is up 142%. Kohl's is up 127%. Maple Finance SERP is up 371%. You just see these numbers and they're staggering. Robinhood, the online broker, is really been seasoned on this speculation. Robinhood's up 450%, by the way, in 12 months. Robinhood's rolling out prediction markets for the NFL and college football. And Interactive Brokers even launched a prediction market in the US and Canada. And of course, not to be outdone, sports betting apps aren't sitting still at all. DraftKings applied for a new applied to the National Futures Association to run its own prediction markets, and FanDuel partnered with the CME Group out of Chicago to offer bets on S&P 500, the Nasdaq, oil, gold, crypto, and GDP and inflation. Even you can even place bets on that. So riding this wave of momentum, really companies are trying to cash in, and on the willingness that investors are willing to wager, really almost on anything that moves. Um, and a relatively new index is watching what's connected with this trend and holds a collection of the aforementioned types of speculative stocks and assets. And this is one to keep an eye on. It's called the Degenerate Economy Index. Now, I can totally relate to this because as a trader and former trader in the pits in Chicago, we used to bet on basically anything and everything. This is not healthy. This was not beneficial for anybody's psyche, other than the fact that we would bet on how fast clerks would walk back to desk to return tickets that we had dropped in the belt. We would bet on who was dating on the floor and who was going at how fast clerks would be able to pick up lunch, and you name it, it was bet on. So I totally get it, and without a doubt, we all call ourselves degenerates, and we knew it. But now, here, fast forward, there's this entire economy index that is allowed and capable of you being able to really bet on anything. And Howard Linson, the co-founder of StockTwits and Social Leverage and a couple other companies, believe he was a one of the angel investors in Robinhood. He created this index a few years ago, and he really describes the degenerate economy as this new phase of investors' ownership and gambling, living life with the wallet on and on your phone. And this degenerate economy includes education, experiences, and activities that you can bet on. We've really seen that you've connected hundreds of millions of young people into investing, trading speculation, crypto, gambling, betting. And essentially, this is a huge economy that's connected to free time and to mobile, social, tech-heavy world. These social tech-heavy worlds and anybody that wants to speculate. And I'm just bringing this up because, of course, I'm not advocating in any way, but you need to be aware that this is out there and that it is a lot of noise. You're seeing a lot of players on X, on Instagram, on TikTok, on a number of different places that, they're not vetted, they're not licensed. And you need to be very, very careful where you're getting your information from, is my whole point. So, not saying that the information is something you should ignore, but just be very cautious and cognizant of the fact that any recommendations that you're getting out there in the noise of this degenerate economy might not be true. So, um, it's more of a warning than anything else. I really just want to be able to talk about this because I'm seeing it a lot and having conversations certainly with the interns that we have in our firm, as well as my kids. The kids are children's friends, that they have a lot of questions. And so let's make sure that we're getting the right information and the right financial literacy that is being disseminated for sure into this, into everyone's minds here to make sure that you're considering the fact that it might not be the best guidance, it might not be the best advice. So, but this indice holds a lot of companies, both new and old, that can really maybe benefit from this degenerate economy. And by the way, this industry changes a lot. There's a lot of movement in and out because some of these companies aren't necessarily doing all that well or they move on. But since the index's inception, it started in 2023 through August here, it's been up like 156% compared to like a large cap benchmark of like 67%. And it's up 23% year to date, and that's more than double the performance of the S&P 500. Um, so it is helpful in two ways. First, if the bull market stays intact and the companies of this index, sort of receive additional tailwinds that kind of push the speculation, um, it can outperform the S&P 500 and probably will, um, even though there's just tons of risk. But the second way is many of these companies are benefiting from this enthusiastic, crazy speculation. And they offer this sort of loose proxy to kind of show us when this impulse wanes, and I've seen this before, traded through the dot-com boom and the dot-com bust. Um, it could be a warning, certainly for broader markets. And to reinforce this point, a back test of the indice from its website goes back and shows that it plunged 41% in 2022, and large cap benchmarks dropped about half as much. So, if it turns and if it goes down, you're in for a world of hurt. for sure. But monitoring this and monitoring this indice is something that really doesn't hurt to educate yourself and doesn't hurt to at least pay attention to. So if the speculative world backs off and basically says, "Oh, I've lost money, I'm out," and the retail investor comes in, kind of like as a sheep, where the institutional share classes and the institutional institutions are going to basically be the sellers, where the retail's the buyers, and then the world falls apart. Um, you want to see that you would see that indice would break down before the S&P 500. And that's the whole point. It's kind of a tell to keep an eye on. And so that's why I bring it up. I also wanted to be able to make sure that you're getting good advice out there and also paying attention to things you probably never heard of. At least, most of you out there, it is a degenerate economy index. And it is based on the degenerates of the world that are trying to really bet on anything that moves. So I hope that was helpful. If you have any questions on this or anything in the future, certainly Greg at fairwealth.com is my email. We're broadcasting on WVLP 103.1 FM. The show's Money Matters with Greg. You can find us anywhere you pod as well on Apple, Spotify, and YouTube or anywhere else that you go. And we're always happy to be here trying to help you um, grow your money, invest your money, protect your money, and ultimately distribute your money however you like. So, with that being said, I also wanted to mention that the Sevens report that we follow quite often has a really nice report on that as well as far as the degenerate indices. So I want to thank that report for the ability to be able to kind of use that report for and give props for what this indice is. And if you need more and more information, I highly recommend you subscribe to their newsletter. It's a paid newsletter. It's very, very good. It's very unbiased and very down the middle as far as information. It's called the sevensreport.com. I wanted to update everybody on the next and what's coming down the line here for Money Matters with Greg as far as a number of different things. We did open up an office in Tampa, and we are very, very proud to be able to welcome John Farrell as our Chief Investment Officer onto Farrell Wealth. He's been with us for a little over a year now. I want to congratulate him on his nuptials, got married over the weekend. We were down in Florida, down in the Anna Maria Island area with family, had a wonderful time down there and was great to put everybody together and was great to wish John and Shannon a fantastic future. Very, very excited for them and very excited for our guy John to crush it in Tampa and bring the same things that we've brought to all the different clients throughout the nation to the area of Florida. And with our office in South Tampa and Hyde Park, we're very excited to be able to have that be a part of it. So, congratulations to John. Well done, brother. And looking forward to having him on the show as well as many times as we possibly can to use his big brain that he has with a number of different topics. And that's what I want to mention today. Just following up here as far as the end of the show. Some of the things we're going to talk about, and this is where I really would love some input. I wanted to talk about, we typically talk about market volatility and the volatility that is the roller coaster of the world of investments, and that we try to get you to be really able to focus and not derail your financial goals. We've always said that, and learned from our father, Dr. John Farrell, that if you make a plan, you work the plan, and that is your financial goal and your financial strategies. So, topics in relation to market volatility and making sure that you're sticking to your goals and staying focused, staying diversified, and just remember that volatility is normal. It does happen. The other topics we're going to breach coming here in the next few months are paying off debt. The average American carries about $104,000 in total debt, and If you're ready to tackle your debt and sort of giving up coffee or vacations, um, how we might be able to do this and where you need to do it is you can find this at consumeraffairs.com. That many of the debt statistics that are out there are on that website. So I highly recommend as a source you find that. We're going to be talking about how to pay off debt. What are the techniques to be able to do that? Then we'll also be talking about buying a first home. Right now, the unaffordability of homes is pretty intense, especially for the Gen Z generation, without a doubt. But if you're thinking about buying a first home, that all starts with the plan as well. Budgeting, saving for that down payment, and really understanding what your mortgage options, as we mentioned, interest rates look like they could be cut at an 86% chance here in September. So how will that affect the mortgage rates? And we'll be talking about that as well. And then what everybody has as a goal, or most people do for sure, because they want to move on and make their everyday life a Saturday, is retiring early. How can we go about that? And do you want to retire early? Is it possible? And what's the right strategy as far as that goes? Think, determined savings, smart investing, minimizing debt, and all those other things that go along with retiring early are really, really important. We want to talk about that. We're going to have lots of topics along those lines. Then starting a college fund or maintaining a college fund for your kids. College costs have been rising. And, starting a fund doesn't really have to be this overwhelming thing. It's very simple to do. 529 plan offers many tax advantages and flexibility for sure, depending on your state and what that might be. It might even include tax benefits or even tax credits that you are able to use by funding an account for your child or your grandchild, which is really key. So, look, starting early on that, contributing consistently, really kind of if you want to explore those options, obviously that's what we do. But we're going to be talking about starting a college fund, how you can do it, what's the best ways to do it. And then we're going to talk about, of course, we always talk about advanced tax strategies, and we're not an accountant and don't play one on TV, but we do know enough about the tax codes to be dangerous, to at least help you and then also consult your professionals, of course. But reducing your tax burden, advanced strategies on really tax loss harvesting, charitable trust, asset allocation that can kind of make an impact overall. These are all really things that we want to be talking about, and we do on this show. And then going into legacy and estate planning. Leaving a legacy isn't just about wealth, it's about the impact you can make not only to your family's life, but to others. Estate planning can really ensure that these values and the assets and the intentions live on. We want to talk about that, how you can build a plan that honors your legacy. That is something that's really, really important to you. We're going to talk about, again, we're going to go into more values-based in investing too. Investments can be more than just returns. They can reflect your values and make sure that you are reflecting those values, whether it be sustainability, social impact, governance, you name it. The values-based investing, it does help align your wealth with what matters to you most. Some people are really into this. Some people will absolutely want to follow it as much as they can. Some people don't necessarily care. They just want to be able to make a return and move on. But to let us help with that vision, I'm going to help you with that vision here with Money Matters as far as that goes. Then I'm going to just keep on rattling off some of the things we've been wanting to talk about. And if you want, in addition to some of these, please let me know, greg@farrellwealth.com. But the one thing that we feel like we do a really good job of as a multifamily office and family office services is managing significant wealth really takes more than just investing, and it takes coordination, and you really need to make sure that the family office services sort of bring together all these tax, legal, estate, philanthropic planning. These are all things that we do at Fair Wealth. And that's what we ultimately bring to you here as an audience too, is what we do for a lot of people throughout the nation. We bring on and bring these ideas to you. So some of these family office services, that's what very, very wealthy families have, is a family office where they just manage their own wealth and there are no other clients involved. So what can we bring as far as a coordinated approach to you? We want to talk about small business owners. That is 95% of all businesses in America are small businesses. And as a business owner, you have your personal and professional finances and your business finances. They're sort of very connected. Trying to help you manage those as a business owner, tax strategies that can help with retirement planning, retirement plan services. We're really, really good at formulation of plan design for business owners. That is without a doubt a forte and something we love to do, and help business owners grow their wealth and also see if they can't put away more money for their family. Uh, to the women investors, we're going to be talking about how women are building wealth like they've never before, investing with a purpose um, for financial independence. We've seen it across the board, financial independence to legacy planning to intention for their family, their goals. Really have now seen a focus of a much better strategy and much more concentration and discipline to help this, really to help this demographic, invest more, invest wisely, and building that plan that it's really, ready to take control. We're seeing definitely a shift, and it's fantastic to see how really women investors have really moved forward with intention. We're also going to talk about baby boomers and retirees. Retirement just it really isn't a finish line now. It's sort of a new chapter, and whether you're retired or planning ahead or these tailored wealth strategies really matter in retirement. There's ways to be able to change your allocation that isn't so growth focused to go more towards more income focused. What does that entail? How do we do it at Fair Wealth, but also like how do others do it as well? So that's something we're going to be talking about. Then we're going to go into the Gen X sandwich generation, which is my generation for sure, and my wife's, and really caring for aging parents while raising kids and still planning your own retirement. You're not alone, and thoughtful financial strategies are really, really important. And then I want to talk about the millennials, building a career, raising a family, planning your financial future. It's a lot. And, you don't have to go it alone. You need to assemble a team. But from budgeting to investing, how you can help as far as creating a strategy that's working, that's best for you and your family. And then Gen Z, as I speak to a number of different kids out there, especially our kids, because we have three of them, just starting out, just basically starting to build, investing in even small amounts is really, really important. It can help you build a ton of wealth over time. So thinking long term, staying consistent, letting compound growth do its thing and work for you, are things that we want to be able to talk about. So I bring up all those topics because that's really the intention of this show and what we try to do here at WVLP 103.1 with Money Matters with Greg, and then also on our podcast and everywhere we podcast as well. So that's what's coming. So if you're all in, like us, follow us. We'd love to have you aboard with the family. And that's our intention, is to kind of grow with these things. If there's other things you want to be able to know about or you think we should include in regards to these topics, in addition to, please let us know. It's Greg at fairwealth.com. It's my email. I'm Greg. Farrell, CEO and owner and president of Farrell Wealth Management. It's a wealth management firm here locally in Valparaiso, Indiana, and then nationwide in 24 states. We're helping people all over the nation. If you want to be a part of it, we'd love to be able to have a conversation with you. But also, please let us know if I can say one more thing, one more time. Let us know what you want to hear about and how we can help you and make this podcast the most informative, best value ever. So thanks again for being here today, listening in. I believe it's 164th episode or something which is crazy. It's maybe 165. We're flattered to be here. Thanks for being to WVLP 103.1, and then anywhere your podcast, you can get us on our socials as well. So thanks. Have a great week. Go Bears. Beat the Vikings. See you. Bye.
Thanks for tuning in to Money Matters with Greg. We hope you gained some valuable insights today. Remember, your financial journey is personal, but you don't have to go it alone. If you enjoyed the show, be sure to subscribe and share. Until next time, here's to making your money work for you. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.